I had actually spoken with CrowdStreet more than 5 years ago. At the time, the leader at the helm was Tor Steen. We had a great conversation. And so I'm excited to catch up and hear how things have evolved. I think at that time, I'm not sure if the positioning was still the same, but I know the predominant flow through the platform was in real estate investing.
Hmm.
I know your positioning now is a bit different in that it's across private asset classes. But can you give us a sense for the different asset classes and which ones maybe, more have more volume than others?
Sure, of course. And again, thank you for having us. And I also see that you're a UVA alum, if I had that correct.
Yeah, Wahoo Wah.
There you go. So it's always actually I'm going down there in a few weeks to visit campus. But yeah, so it's CrowdStreet, historically, so I joined CrowdStreet as the CEO about a year and a half ago. And up until that point, the business had been focused solely on commercial real estate. So providing access for high net worth investors to an array of commercial real estate opportunities, both in the form of direct deal investment opportunities as well as into funds. And when I joined, one of the key strategic priorities that I set forth was, why don't we expand this? Why are we helping investors just solve one part of their portfolio in commercial real estate when I think we have the ability to provide them more solutions across broader private markets? And so over the past year and a half, we've done a number of different things to make that possible, including sort of an upgrade to the technology platform, new partners on the distribution side, new partners on the diligence side. And sort of the result of all that work is now a multi-asset class platform. And that's also supported by sort of a new brand that speaks much more broadly to the private markets. And so today we offer access to what you may expect. So private equity, private credit, venture capital, real estate, and that list of sort of private asset classes will continue to expand. And RJ, for these newer asset classes to CrowdStreet, we're offering those in fund format. So we're offering diversified fund products to allow investors to access these markets.
hmm it's been a really interesting time for the private markets over the last couple decades. A lot of innovation has happened. A lot of platforms have come about. You were part of one of the platforms that was, the talk of the town, iCapital. And I think in the beginning, what was really interesting is major placement agents were coming together to kind of form this. Help form the ecosystem and facilitate family offices coming into this platform for private equity investing. What did you learn there um, that kind of clues you into how to best build CrowdStreet going forward?
Yeah, that's a good question. I certainly learned a lot. I was there for almost a decade. But backing up to sort of the first part of your question, I've been in my entire career, 20, coming on 25 years, sort of in and around the private markets. First at a series of banks, then actually as a placement agent, raising money for private funds from institutional LPs, and then obviously for many years at iCapital. And I think you're right. There's been sort of a decade and 2 decade and a half evolution from private funds just being available to the biggest institutions. And then, slowly that began to sort of open up into the broader wealth platforms. And now, with groups like CrowdStreet, we're trying to open it up much more broadly to the sort of individual investor. And so there's sort of a clear arc of history there. I learned a lot at iCapital. I mean, like you did mention, sort of the early days of that business, the seed of the idea was born by a number of people, including myself, who had been in sort of the institutional private equity world. And we were sort of sitting around and saying, why are we doing this? Why are we on airplanes? And why are we FedExing sub docs and carrying presentations? This is sort of the early
hmm
2010s. This is, why can't we digitize this? And so that was actually one of the first business models of iCapital. It was like, let's just digitize the fundraising process. And at the time, really thinking about the institutional fundraising process. It then became pretty clear pretty quickly that a big university endowment really wasn't going to pay us a lot of money to help us find XYZ private fund. that they might have some benefit to the scaled use of technology or no paperwork, but for sort of a one-to-one transaction where a big LP is investing $100 million into some large fund, you really don't need technology, right? One subdoc, one LP to report to. However, when you broaden that out to, in iCapital's case, thousands of financial advisors and tens of thousands of underlying clients, technology becomes really important, right? Because then all of a sudden you're dealing with this voluminous amount of paper. And so that was sort of one of the early sort of light bulbs that went on over all of our heads at iCapital, that wow, we can use this technology we've built to actually open up this asset class much more efficiently into the broader wealth management community.
Hmm.
And I think one thing that really surprised us early on in that business was even the biggest wealth managers. We initially started out by selling into the RIA channel, and then and then we started having meetings with some of the bigger banks. And it was interesting because they had the same problems. They had paper problems, they had access problems, they had education problems, they had workflow problems. And so then iCapital began servicing and continues to service, those sort of large, the largest wealth management firms, globally. So I saw that world from sort of the inside. I sort of, iCapital was in the middle of a lot of that run up in private markets and wealth management. And so I saw the power of technology to deliver these assets at scale to a broader group of people. When I got the call about the opportunity at CrowdStreet, they said, well, the board had called me and said, what would you do were you to become the CEO? And I said, I think you've got a good base here on which to build with this real estate platform. But in sort of the arc of history we were talking about, I think this is the next leg of the stool. So if I'm a private fund manager and I historically would call on institutional limited partners, and I've sort of mapped that universe, now I've sort of mapped the wealth management universe, the big banks, the RIAs, et cetera. What about this whole universe of what we call self-directed investors, the folks who don't call their financial advisor to buy NVIDIA, they go into Charles Schwab or Fidelity to buy NVIDIA. Why doesn't that exist in the private markets? And what is the solution for those people? And so that's what got sort of me and gets the team here excited, which is sort of providing that, we believe, huge subset, millions of Americans, we believe, want to invest in this way, to provide them a platform where they can responsibly research, access, due diligence, and invest in private market strategies that may make sense for their portfolio.
Hmm.
And so it's really an extension of all I've learned in kind of my career, and certainly the time at iCapital, and just sort of building into this new channel of investors.
Hmm. We've had on either this podcast or other podcasts a handful of other platforms related to private investing. And you get different, I guess, strategies. One could be what you're talking about, making accessible different asset classes within the private space. Others are point solutions, like we're only doing a tax efficient investing, or we're only doing a certain type of debt product.
Mm-hmm.
People approach it differently. I guess, why are you convinced that going broad right off the bat, well, it's not right off the bat, you've been around,
Mm-hmm.
but why are you convinced that's the right strategy?
I think from our perspective, we think about one of our core goals is to help our members. Maybe our core goal is to help our members achieve their financial objectives, particularly in the private markets. And if you start there, and we start there as a company, and so that sort of informs all of what we do, sort of servicing the needs of our customer through that lens. And if you think about it that way, it actually doesn't make sense to just offer one asset class, because if I'm an investor, why should I have to go to this platform for private equity or this platform for private credit? By the way, these platforms don't speak to each other. Wouldn't it be nice if I could go to one place and access all the education, all the due diligence, and all the offering set that I would like? And so, from our standpoint, it was that it was sort of that guiding star of helping again our customers with their investment objectives, and giving them one place to access an array of strategies, as opposed to sort of forcing them to go to multiple platforms to access different opportunities.
Hey, well, one of the challenges is always maintaining high quality deals on the
Yeah.
platform. So how do you ensure you get the best private company deal, the best private fund
Yeah.
deal, the best real estate deal?
Yeah, I like to not speak in certainly sort of superlatives when it comes to private markets, so I don't try to use the term best, but
Right.
I certainly follow I follow the question. There's a few different ways we think about it. One, we obviously knew that due diligence was critical to what we were doing: access due diligence, investment due diligence, operational due diligence, general education, and market awareness. And as opposed to when I joined saying we're going to build that entire team in house, hire research experts in private equity and private credit, venture capital. We took a look at we sort of went out and met with a number of investment consulting firms. So these are firms that help institutional investors navigate the markets and help them with manager selection and portfolio construction. And so and this is a public partnership. We've entered into a partnership with a group called Callan, Callan. They're probably they're a top 5 by size investment consultant globally. They advise on trillions of dollars of assets. They've been around for 50 years. It's a private partnership based in San Francisco. So from a diligence standpoint, they are our diligence team. And so they help us with sourcing, education, manager due diligence, ongoing monitoring. So sort of from a quality standpoint, our members are now benefiting from the thought and the guidance and the diligence that is the same thought, guidance, and diligence that Callan gives to its insurance company LPs or its university endowment LPs or its state retirement plan LPs. So that's one way we think about, sort of quality, which is that sort of Callan backstop. Another way we think about this is we have to work, what we prefer or we aim to work with firms who sort of believe in our vision of sort of opening up this self-directed market. And so while we've raised about $4.5 billion on the system to date, which by the way we think we can get much larger than that. But for many of the private fund managers we're working with, and we have publicly announced relationships with, for example, Nuveen and Stepstone. These are very large firms that are raising a lot of money across their various strategies in both the institutional and the wealth management community. So to put this sort of slightly more bluntly, they don't necessarily need our money today. Raising money is not their problem, but they believe in our channel as a long-term partner distribution channel for them. And so they're willing sort of to take the time to go through our diligence process and work with us because they believe in our vision of sort of enabling these types of investors to access a broader array of products, again, in a really thoughtful manner. And so I guess those are two of the ways, we think about it. We also aim to, since we don't, we're not an advisor, we're not telling our clients what to buy. It's very different than we're not a financial advisor. We're not a wealth management firm. And so when we think about the term best to you might be very different than best to me. And so that's part of the goal of offering a diverse menu. So to allow investors, we sort of meet them where they're at. If they're newer to the private markets, we want to give them the opportunity to buy, a handful of funds and make that a very diversified portfolio in a relatively efficient manner. Or if they're, very experienced in the private markets, hopefully they can find things on our system that are a little more niche or emerging or, slightly more targeted than a broadly diversified fund.
Mm-hmm. You described your channel or the channel you're most focused on very well. And I'm curious if this same kind of person or investor who veers towards the more educated, more affluent, it sounds like they can self-direct. How much are they going into these other platforms? Maybe it doesn't matter because they can work across multiple platforms. And you're not necessarily competing head to head with, say, Case or Equity Zen or Forge.
Yeah, know all those companies very well. And there obviously there are nuances and differences again between us and all of those firms, and I think highly of all of those firms. But yeah, I don't view this as a winner take all market, wherein if we had a direct competitor that did exactly what we did, it's a zero sum game versus us or them. We can't control sort of, where our clients invest. Probably most or many or perhaps all of our clients have a financial advisor and they use that person with estate planning or with other parts of their investment portfolio. What we would aim to do is create sort of such a great user experience through our technology, through the offerings, through the diligence, through the education, that we capture some market share of their investment activity. But we are not at the moment, we are not a wholesome service. We don't provide access to public investing. We don't provide estate planning services or other wealth management related services. So I would expect that many of our clients have other platforms or advisors that they choose to work with. I think over time, much like you've seen in other parts of the fintech platform world, and certainly like you've seen in the private markets broadly, there will be consolidation in our space where firms like us will link up with, acquire, partner with groups that do something else for similar investors, to provide sort of a more wholesome set of services in a one-stop shop.
Hmm. Yeah, I was having a conversation with a fairly senior person at one of the large investment banks, and they were talking and they were saying they were having internal conversations about a platform to purchase, to acquire. They saw that, I believe, as Morgan Stanley picked up EquityZen. Um,
Yep. Mm-hmm.
and so they're actively considering the other platforms out there. Do you think about that? I mean, is that, on the horizon, or are you focused just on what do we do as CrowdStreet as a going concern for the foreseeable future?
Yeah, I'd say squarely the latter. I think if we build this business or continue to build this business in the correct manner, which is inclusive of a world-class brand, there's very little brand awareness of the private markets, actually, despite, when you may read in the press, the actual average investor from our research doesn't really understand the private markets and certainly doesn't know many of the players, maybe outside of the largest players. So we think there's a really opportunity, a very large opportunity in sort of the brand awareness part of this. If we think we can build that correctly, build a great distribution engine, build a great sourcing engine, build a great team, continue to upgrade our technology platform, we'll have success as a business. I certainly learned earlier in my career, if you do that, a lot of financing options become available to you, whether
Mhm.
that's selling the company, merging the company, staying private, taking the company public. Those are all outputs from my perspective of sort of the hard work we do every day. And if we do all that hard work correctly, hopefully we'll have some of those options.
How big is the portion of private company investment opportunities on the platform versus the other asset classes?
So private companies. So today, maybe I'll answer that question this way. So today we're focused on fund investments
Oh, just
as
fund.
opposed to
Okay.
individual company investments.
Hmm.
So if you think about it as a college, from a college analogy, we're offering, to some degree 101 investment opportunities right now. So diversified products across the major asset classes. There will be a day where we offer the 401 class, which might be a co-investment opportunity, which might be an opportunity like a pre-IPO technology company that you might buy on a platform like Forge. But
Hmm.
as we've moved into these other asset classes, we have started in that sort of 101 fund level.
Okay. And then in terms of who's the target, we talked about some of the characteristics of the target investor here. What should be their minimum net worth?
So our products are for accredited investors.
Okay.
So,
So it's
$1 million.
fairly low.
Yeah, $1 million in net worth as opposed to qualified purchaser, which is the 5 million. We offer a number of evergreen strategies that obviously have been created by any number of asset management firms that make these private strategies available to that level of net worth. There are certain strategies that make the make these funds available to folks below that threshold, but for our platform, it's that accredited investor threshold.
Excellent. And then what's the average investment size that
Yeah.
folks put in?
Historically, the average investment size has been about $56,000. So,
Okay.
not $5, not $10, not $20. These are substantial commitments. The average person on our system is a qualified purchaser. Most of the wealth on our system is held by qualified purchasers,
Hmm.
um, and that's historically has been the average ticket size, which is just over that 50K number.